Hey, good morning, everyone. I know I put a post out earlier. I'm going to be a little more active here in the future, just trying to be more intentional about that. So, I want to do sort of a daily check in here, go over some of the stuff from the post, some of the levels, and see where we are. Give us like sort of a landscape of everything. So, right now it's 10:30 Central. Which puts us, just after European close here. So usually markets get kind of quiet. So this would be a good time to maybe do that. I want to try another thing. I want to try, but it's always difficult. I probably won't do it for every market we cover here. I'm gonna try to get some daily levels out because the program I've written here and all you've seen so far is the weekly levels that I put out, hopefully on Monday mornings. But I also, the same sort of algo creates levels on a daily basis as well. So I might load some of those up here just so we can see how that plays. Now, um, I know we added some markets. I've taken some away because I felt like, my work wasn't really adding value. This methodology works better for some markets than it does others. Um, So the ones I retained, I try to stick it major to the major markets. Kind of ditched some of the fringe stuff. Um, I did that without mentioning it. So I hope maybe you noticed. The intention when I added all those markets was like, all right, I get everything sort of automated now, whereas before I was doing things completely manually. Um, So I was like, oh, well, maybe I can expand and maybe reach more people, help more people with different markets. But as I got into it and I started observing the way that my uh, programming worked on those markets, I don't think it was very helpful. So I just said to hell with it and moved on. So we're down to the entire Treasury curve, ES, NQ, and the Dow. We've got CL, so the crude oil, gold, silver, and Bitcoin. That's where we are. So I'm gonna go through them here. I'm gonna skip sort of the front end of the curve, and I'll show you some other things I'm looking at right now. So let's start. Well, maybe I will just go ahead and start with the twos. Let's take a look at the chart here. I normally like to expand the chart, but just because I want to be able to flip without flipping my panes here. I want to be able to just flip from market to market, so I'm on my main screen here. So you can see the bubbles here. That's showing our weekly levels that were put out this morning. Going to go ahead and add a study to show you some of the daily levels as well. So daily. There we go. All right, so this is going to cloud the chart up a lot. So right now, actually, I'm going to take that out because it just makes things look too confusing. Let me remove it. There we go. We'll stick to major markets on that. Or maybe I'll just do a separate post with daily levels and just clean the chart up. Maybe I'll do that as like a Tuesday preview later this evening once those levels populate. So basically, the way this programming works is like the levels will populate technically like last night at 5 Central the levels populated. But the reason I don't get anything out on Sunday night is one, I'm spending time with my family. Two, when they initially populate, the lines don't show. It shows the lines from last week. So I've learned that Monday morning everything's there. So that's how I've been getting it out. So, all right. Anyway, so we set out our pivot at 114.12 for the twos. And we're trading above there. So buyers have stepped in this morning, whereas sellers, we saw some profit taking there at the end of last week. You hear some stirring behind me. That's the dogs. Anyway, so that's selling on after Thursday, and then there's some after hours as the news came out about some of those jobless claims were a little bit inflated by some fraud in Texas unemployment system. Which, I mean, what do you know? People are scamming the government. it happens. So anyway, twos are setting sort of right in between. I'm going to add a study here just so we have some context. Let's go to shared period 1. This will show these little boxes here. I don't want to cloud the chart up too much, but this shows an opening range. So a 5-minute opening range on the 720 open on the bond market. So twos trading a little bit above their opening range at the moment. What you'll start seeing here as I flip through these is either the flattening or steepening mechanism that's going on in the market. So you'll see relative strength across the curve that way. So this is where we started. This is where we are. Let's move into the fives because nobody really messes with twos. I'm just doing it for posterity. So as you can see, fives are running a little hotter than the twos. Twos should be in a pretty right place for all things considered. Everybody's sort of priced in what they're going to price in on the front end. Fives have pulled up a little more, so as you can see, they're trading currently above its pivot, which happens to be pretty much the OR from Friday's midpoint. This gray dotted line indicates a midpoint. So above today's opening range, so buyers are in charge. Sellers are trying here as we approach that first resistance at 27. You have to excuse, by the way, these levels, when you see them on, say, fives, classic tens, twos, the numbers aren't going to necessarily match up just because it's automated. Now, in this case, it does. Sometimes you'll see some sort of random print on classic tens, and we'll see if we come across one, like a price level that actually doesn't exist. In those cases, I just round to the nearest tick. So anyway, starting to see it push a little bit here after the European close. So that's that. We've got positive slope on this average. I'm looking at a 5-minute chart here. The reason I'm doing that, I actually don't trade off of 5-minute. I actually trade off of. I'm gonna go to a longer time frame before I show you that. Trade off of a tick chart actually. So anyway, fives sitting here above its pivot. So again, buyers have stepped in this morning, taken back what they gave up last week. Let's go look at the tens, classic tens. You can see a little more stretched even than the fives, but sort of following together there. Above the OR, slope is positive on this moving average. I can pull out to 30 minutes. Oops, hold on. Ugly chart. There we go. There you can kind of see this is a 30-minute, zoomed out a little bit. The reason I'm not showing the 30-minute is because it becomes too close to these little bubbles and obscures the price, the actual price action. So, all right, so sort of at a midpoint. The top edge of this pre-NFP range has been held together, and we're sort of moving back through this range. I don't expect a break until Wednesday, one way or the other. So I think that we're going to be playing across the board. As I go through each chart, you'll see. I think we'll be playing sort of within these boundaries here up until Wednesday. And then it's just a matter of what Powell says. We got retail sales. I guess that could do it. That could move it. But a lot of times you'll see that when you have an important data point like retail sales, but going into something bigger, you'll see an initial knee-jerk reaction, and a lot of times you see it pull back into the sort of range that we've been playing in. So there we are. On the classic tens, our pivot was this 113.085. We were there. I think we were bid there right before the open today. So here's your OR. And yeah, so we came off the pivot this morning. It was a pretty easy buy. I wasn't involved because I don't trade this one. I was trading Ultra 30s this morning and actually got in on that, and I'm done. That's why I'm making a video, because I'm flat. Anyway, let's move on to the Ultra 10s. As you can see, now, long end has shown relative strength. As you see that if I flip between these, let's go back to twos. Kind of looks weak. barely off its opening range. 5s, a little higher, a little above its opening range. Classics, nice. Now if I get into the ultras, they've pulled away, right? They're pulling away, pulling into all this. You're probably looking somewhere in there. Right now it's playing around on that first resistance level, which happens to be, I believe, the high of the day. Let's go look. Yeah, the high of the day is our first resistance. So maybe come back for a little breather here and kind of back test this area. I'd like to see that OR mid maybe play, but it would be 116 is a pretty important spot. So maybe we get another test that. I don't know. But that's what you're looking at. Again, sort of a range trade up until Wednesday, and then we'll take it from there. Let's go into the classic 30s. And again, you see that relative strength as opposed to the front end. Let me show you up here. You see these little things on my watch list. These are all the little curve combos, if you will. I think a healthy portion of the market, of the futures market for treasuries, is just that, is people doing curve trades. So it's kind of mixed, although we're seeing it on our charts. Now, this is an absolute sort of situation, so it's based on, the close from the other day, or from Friday. But as you can see, throughout this session, you have seen some flattening of the curve. Whereas over here, if you look, some of this stuff is steeper, some of it's flatter. Negative means flatter, positive means steeper. So, or I should point out, obviously, in case you're not, I don't do green red, I do blue red, and blue is positive, red is obviously negative. Everybody knows that. But anyway, trading slightly, the ZB is trading slightly above first resistance, which was that 117.23, which was pretty strong, I guess, on the first attempt. I wasn't looking for a short because this morning, I see this. You got a higher low. Oh, this is basically right when I sent out my article this morning, or my market prep. I'll show you where I was actually. Let me go to. I was in ultras. You see these trend lines. I'm not I only use trend lines for intraday stuff, really. Those are left over from this morning. So, if I were to show you the actual template I trade on. You can see I just finished my article right in here, or my prep. So I ended up buying up here once it broke back above this, and I carried it up until this trend line got broken here, which it no longer exists on my chart. So I ended up actually getting tagged here myself. But, it was a good 14 ticks to start the week. I was pretty happy with it. But let me go back to I guess we might as well just carry on with UB here. I think I covered ZB. Let me pull back just a little bit. Here's ZB again. Our levels automatically printed were, it shows the second resistance happens to be the high of last week. So I love it when that happens. You get that sort of confluence. That's going to be a pretty important spot up until Wednesday. Whether it breaks, makes a higher high or not, is going to be up to the market's sort of interpretation of whatever Powell has to say. Now, we're pretty... I'm trying to figure out what I'm trying to say here, excuse me. So, I don't know. I think if there's any sort of breakout prior to that, like if this level is to be broken, or if any sort of breakout happens across the curve, I think it's probably in the long end. Just you're seeing this relative strength as opposed to the front end. So you get more of a range trade on the front end and the belly, and then as you get in the long end, you do have the potential. You don't want to box yourself in and say, oh, well, it's not going to go anywhere this week. Because, there's a lot more than just the Fed influencing the long end, obviously. So, there's a possibility that these levels do get breached, although I'd be slightly surprised. Maybe a really bad retail sales hits it and you know sparks another squeeze, which we're dealing with a lot. But this is a pretty strong formation because you have, where's the NFP? Let's go back. Gosh dog. There we go. Here's your payrolls spike. And you might remember that when I was showing you the tens, we were sort of inside of it, right? But we haven't even, let's see here, 116.20 would have been the high that day, that Friday. We haven't even sniffed that yet. 116.22 was Wednesday's low. So it tried to get back in there, but it didn't. Now we're trading at the top edge of that. So definite long end strength here. All right, let's go look at UB. It should look pretty much the same, except you can actually see that. Here, let's do this real quick. Let's go back to ZB. I would say there's a slight relative strength here as this lower high, or I'm sorry, higher low seems to have, let's see here, this is a 119.27 up to say 120. It's almost a handle in between those two spots. Whereas here you're looking at about 8 ticks. So I do see some more relative strength even as I go between ZB and UB. So again, that high from last week was 121.30. Didn't get that sort of confluence we got in ZB, but that's fine. So you're poking at that. We're trading a little bit above this first resistance. We're poking at that second one. So kind of interesting there. Let's move over to equities real quick. Take a quick glance. I do have to change templates for this because the calculations. Oh, by the way, let's go back real quick before I go too far. You may notice something here up at the top. Oops. I didn't mean to do that. If you look at the top left of my screen, right there, current daily range is 37. Our average daily range is 42 for the last 6 months. This also lines up with another statistical measure I use to estimate daily ranges. So 42 is a pretty strong number for UB. So maybe another 5 ticks is what that's saying today, which would put us at, oh gosh, 121.28, 2 ticks below last week's high. So I'm done for the day. I'm not looking to short right now. Too tricky in here for me because you can bet on a breakout. It's just I don't know. Especially today, there's not much left here not much juice left to squeeze. Is what I'm saying. So that's what this thing up here is telling me. So if you look back as I'm popping through these charts, you can kind of see 29 on ZB with a 31.5. There's rounded up to 32 expectation. So you should get about a handle a day out of ZB is what that's saying. We've got 29 ticks. So I mean, if you're trading on the long side right now, you're trading for $100 a contract with your risk to the downside. So no thanks. This is where I kind of just walk off and do something else for the day. TN, it says 17 is the current daily range. The average daily range is 18.5. So when you hear me say things like this is full range for the day, that's what I mean. We're almost there. We got another tick and a half. ZN, 1 full tick away. So it's 13.5. Average is 14.5. You need something in order for these numbers to, here we're full range and above on ZF at the moment. So in order for these numbers to expand, like to get range expansion, you need some sort of volatility event, right? Some sort of news to push it beyond that. Otherwise, day traders are going to see that and say, all right, this thing's cooked. I'm not willing to risk. Just like I mentioned a minute ago, I'm not willing to risk more of my profit in order to gain an extra 3 ticks, right? It doesn't make any sense for a day trader like me. The thing that moves it beyond those are like, all right, a headline, tape bomb, something like that, which brings in other time frame participants that are going to break it above there, and then the traders were like, okay, I better saddle back up. Let's go. Hope that makes sense. That's sort of how my process works on a daily basis. So let's flip over to the equities, and again, I have to change templates here because the calculations on those range things are going to be off. And this will also change the dynamic for this opening range here, right? So this moves that time forward an hour and 10 minutes because we use 7:20 Central to 7:25 for bonds. We use 8:30 to 8:35 for equities, right? So this changes that, changes the calculations for the levels, changes the range calculations as well. And up here you can see that when I did that, it sort of brought up some other studies here that show like a weekly range, average weekly range. You won't be able to see the monthly on here just yet. And this chart also shows a VWAP. I found that ES especially, it's important to have a daily VWAP and a weekly VWAP going. I don't trade this product that often, but anyway, let's pull this out. I have to expand this because our levels are going to be out of whack. All right, there we go. So right now our pivot was 6662. This is the December contracts. This is going to have your roll in it, your roll gap, everything like that. Let me pull this out a little bit. Let me go to 5 minute. There we go. That's going to look better. I'm going to delete the VWAP just so we have less stuff. Let's hide it. And what else can I get rid of here? Let me hide this. That's my buddy Truss's script. It's a very interesting one. I won't go into that, but he's done some good work there, and I use it on the equities. It's very effective. But anyway, let me get rid of a couple of these little things real quick. Sorry for all this. Jeez. So sorry. I'm going to hide the volume profile just to make things a little cleaner. Oh, sorry, guys. This is just Bush League. All right. So this was our pivot, 6662, pushing up against R1 for 6698. I mentioned there was a little side note in there about the spread between SPX and ES. You can see it's about 61 points at the moment. I said it was about 60 handles before. And the level I am really, really watching is that even though it didn't show up on my automated stuff here, is going to be on the SPX at 6660. That is 10 times the financial crisis low. Interested to see what happens there. Interested to see if there's going to be a marginal buyer up there because it's been a hell of a run, guys. I'm not saying short it. I'm just saying I'm going to be in risk management mode up there. Anyway, so here we are. 6734 showed up here. Let's see. Let's subtract 60 from that. That's 60. That's right on there. So that's about 6674 or so on the SPX. Anyway, buyers are in charge. There's nothing on this chart says short. It's bid. This can be. No, I don't think anybody wants to sell it. So that's what you're watching though. Like we get that expansion up to that level. We turn back over and get below that pivot. And it might take Wednesday to do that, something like that. Then you start thinking, all right, okay, maybe we got something here. So I just wanted to be really clear about that. You guys know me. I'm not a bear. I'm not a perma bear, but I do have like sort of a sense for there's every quarter is going to have a 5% pullback, and so I'm constantly sort of looking for levels that might occur from. And the way you do that, I think I explained this on Spaces, is you say, all right, well, where's a level that might start from, and then you roll 5% off of that and look below and see what does that level look like. So what if we do that right now? So 5% of 6660 is 330 points, right? So what's 330 points below on the ES? We'd have to do some 60 plus 6720. So 300 below there is going to be about 6,400 in there, 6,420, somewhere in there. Let's go look at what that area looks like. So right in here, right? So you get an extension, you know, price hits sort of like a psychological level, like 10 times the financial crisis low, like we talked about. What would you expect to happen, right? So the 5%, if we do get any sort of selling, the 5% pullback line puts you right back at prior support. No big deal, right? So that's kind of stuff. That's how my mind works. I'm not trying to predict. I still want to see proof before anything, but um, I'm always when things do start happening like that, when we do start seeing a change of character in the market, I want to be able to rationalize it very quickly. That's how you keep emotions out of things, right? So that makes a lot of sense, right? Now, it's not going to be a straight shot if it does do that. It's going to take time to work its way down there. Again, there's no real reason to sell, right? It hasn't been given yet. I mean, one could make the argument that the employment data lately has been pretty bad. Yeah, it has. The market moved past that pretty quickly, didn't it? So, you know, being objective is very important. And then also being rational when things change is very important. So just keep all that in mind. Don't try to front run anything. Your lungs are still good until proven guilty. Excuse me. Let me pull this out. I mean, this is about as bullish as it gets, right? Trading above this. They couldn't sell here. We're looking at a 30-minute chart, by the way. Couldn't even sniff these Wednesday highs. Let's zoom this in. Let's get payrolls in there. Is that payrolls? Jeez, that can't be. That's payrolls. Yeah, September 5th. Excuse me. Brain's not full capacity yet. So yeah, we really haven't even gone back, and we busted back above the pre-payrolls level, and haven't really gone back to back test since. It's just been on a ramp. So anyway, hang in there. Let's move on to NQ. Get a look at that one too. I don't feel like I'm that accurate with this product. I don't know that anybody is. It's the wheels off thing. All right, so pivot 24,439 for the week, and it happens to be somewhere around the OR mid today. Buyer's still in charge. Same thing. I don't have any sort of projections. I would just say like the SPX level, would obviously spill over onto NQ. But, NQ is trading. Put this into perspective. What's the lows? 16,818. So what is that? Damn near 800. I'm sorry. Damn near 8,000 points off of the low, which is almost 50%. That's insane. That is an insane move. Awesome. Anyway, let's zoom back in. Take a look. So pushing up against that 24,598. You got another 70 points to you there. I fully expect all this to get cleaned up early this week. Like the bulls are going to push it. And we'll wait to see what Powell says on Wednesday, how the market reacts, just like everything else. Let's go look at the Dow. I hate the Dow. It's a stupid market, but I started covering it here. You see the relative weakness. So that is the reason I'm showing it. You are seeing relative weakness in YM. It is negative today slightly, basically flat, whereas NQ's up 70 pips, ES is up almost 0.5%. So, the relative strength in the tech sector, obviously, or the communication services, all that stuff. YM is just 30 stocks, whatever. Wouldn't make anything of that just yet. I would just say that it is trading, the Dow is trading below its pivot. but above its sort of average here. So it's still within its trend, still trending strong. You're just seeing sort of a reallocation as we go into the Fed Wednesday. Retail sales, I guess, too. We don't want to just completely leave out retail sales, but let's be honest with ourselves. The market's really looking at that. Let's go take a look at energy. Now, this is one market that I'm kind of concerned as to whether my approach works with it. Let me change something real quick. Actually, before I do that, let's go to gold because gold runs on the same template as the equities. There we go. Gold's been on a ridiculous move. I believe these are all-time highs. Yeah. Absolutely incredible. Now, one thing I wanted to talk about with gold is often these types of moves in gold front run. I always believe that the gold market is a sort of a smart money market. Others will disagree with that, but what I mean by smart money is that like the people involved in this market are in the business, in the production business, or maybe the retail business, and so on and so forth. And so it's not just traders like you and me that are moving this market, right? Just same as bonds or anything else. But I've always felt like this is one of those markets like there's been times in the past where sort of narrative gets front run big time, and then when the narrative comes true, like becomes a reality, everybody rushes to buy gold and it puts in a blow off top and then just absolutely tanks. And so it moves opposite of what everybody thought after the fact. I want to say a good example of that, or this is going off memory, and it's not going to look like much with the chart, but when you think about that inflation thing driven off of COVID, and then the big thing, the thing became a reality in 2022, right? So here's the COVID mess, right? Here's gold going absolutely parabolic, and then it sort of settles in as the market's recovering and so on. But that high got set then, right? Long before inflation became even a topic. I'd say inflation started becoming a topic over here in 2022. Can't really see very well, I'm sure. But you get this other bounce, but then a liquidation, right? And this is where we get those continuous crappy inflation points, right? And so the top was actually a year in advance in this product. And it actually ended up making lower lows. So it goes against, the sentiment, the overall sentiment. Everybody was telling you to buy gold, buy gold, buy gold back then. And, eventually they ended up being right, but it's pretty hard. It's a difficult trade if you're just having it go against you. Meanwhile, equities bottomed sometime in here as well, I would say. This was a tough hold, regardless, because you're thinking, it's like that meme with Anakin Skywalker and his girlfriend. I don't remember her name. You bought gold, so you're making tons of money, right? I mean, you didn't really. You had to be pretty tactical in order to make money trading this thing during that whole inflation crisis. So that's my point. Is I feel like this market's pretty smart. And here we have this parabolic move. It's not to say it won't go higher. But I would say this is something to watch. Like when you get more validation as to the gold narrative, like it may be time if you're long this product to take some profits, leave some runners, whatever, but understand that this market's way ahead of people talk about the bonds being a smart money market, and I argue that all day, but bonds moving first. I actually feel like sometimes it's the metals that make that move first, and they've made it. This is an insane breakout in gold. So anyway, I've been on a tangent there. Sorry, I hope it made sense. Like I'm not necessarily saying this the way that it's cooked up in my mind. I'll be honest with you. But as you can see, more parabolic move here. We got a new high today in gold. It's above that first resistance at 37.19. Got another spot here at 37.41. You want to see that hold. You know, these are spots where you can exit, or you can say move your stop up below this high. I've always felt like this is a slippery ass market anyway. Then stops do get run pretty frequently in here, and it's a pretty large product in terms of like tick price. Your P and L off your position is this is a big product. Kind of like ES and Q. Um, there's always the minis too if you want to get involved in this. So it looks like all right. I do see here our support levels. This has gotten a little cleaner, I think, over time. I don't know. Maybe here. Let me see. Let's just change this to where we show previous weeks. Let's see how it's been doing with our levels. It kind of mucks up our chart, but it gives us something we can maybe say, all right, is my method working in gold? So let's go say this week. This was 2 weeks ago. You had your pivot. Once it got above the pivot, it ran. Okay, cool. So the average weekly range of 60. Let's see what it did that week. Like 35.05 on up to high was 36.55. Am I wrong? Okay, the average. I'm sorry. I said the current average is 136 points. So 35.06 up to 36.55 that week. So that's what 149. It's pretty damn good. It exceeded by 13. You're actually out right there if you're long 36.40 on this, and then the rest of this is just nonsense. So the method's working somewhat well here. Let's go look at another week. Sorry I'm dragging you through this. If you bail out if you're not interested in gold, but I did think it was important to hold myself accountable here. If I'm providing these levels, I want to see that they're actually helpful and they're working, because I don't trade this market. I watch it, don't trade it. So that week, this was last week, 36.29 was our first support level. Low of the week was 36.21.70. That's 8 points slippage. That's $870 a contract. No, I'm not happy with that, but it is what it is. Once it moved back above it, let's see. How did the pivot act? Well, the pivot was pretty strong in here, and then it became support. So I'm happy with that. Those are pretty clean trades. Pretty low drawdown on that one. Let's go look. If you're buying that level, you're looking for buys at that level, and you're laying your stop below there. 36.50.9. You had $60 drawdown here per contract, probably 20 here. I wouldn't expect you to have hit it. You're probably buying after this tail, but that's where your stop is, right? And profit taking levels, okay, that's all right, pretty clean. It blows past a little bit. You miss out on some. Hopefully, you don't get FOMO. But even if you do, there's your, another entry opportunity here. High of the week, let's see here, was 37.15. That was only a 94-point week, so that was a pretty low range. So you may have been left on the, thinking there's going to be more, and it didn't do it. So okay, not a great week. The levels were okay, but the range expectation didn't get fulfilled, so on. So anyway, we'll keep running this. Let me pull this back. Fly. Okay. All right, now I'm going to switch over back to, I'm going to go to silver since we're already talking metals, and I do have to change templates for that. Load style, main template. Well, okay. Let's hide this profile. Actually, sometimes looking at the profile is cool when we look at past levels. Like, theoretically, if these levels are working right, these points on the chart would end up being high volume nodes. So let's do that again. Let's look at previous weeks and see how they've lined up. All right, so last week, our level hit there. There's one. That's our first resistance. It's 41.97.40, and it's the top edge of this profile here, this balance area. Our pivot last week was the bottom of this balance area. So yeah, it's been working. These levels have been doing pretty well by us. In fact, this was the R3, the top resistance for last week. It's a high volume area, a balance area. It's pretty cool, man. Let's back all this out, clean up the chart a little bit. Edit study, I want to put it on this week. I'm going to hide the profile now. Let me hide this. I didn't realize that was on there. Okay, we cleaned it up a lot, didn't we? Let's put this back to 30 minutes. Pull it up. Sorry. I want to get all the levels showing. All right, here we go. Obvious uptrend also in silver, parabolic, crazy. This is, a lot of people have been waiting forever for this to happen. Good for you. I hold some physical. Maybe I'll get rid of it. I bought it in 2021, so we'll see. Anyway, trading above its pivot, 42.88. This is one of those instances I mentioned earlier where these levels are going to be sort of goofy, just based on the way the levels calculate out. Like if I pull up a DOM, you'll see that these are priced in half-tick increments. So these aren't half-tick numbers, right? So you just have to round and adjust manually. So anyway, again, great uptrend here for silver. Levels are working pretty well. It's good to see. Above the pivot, so buyers are still in charge. No indication given to sell or short the metals. So there you go. Last thing we're going to look at today is the crude. I guess let's go ahead and take a look and see how it's been behaving. This is another market I've been sort of concerned about, whether or not my levels are helpful. Nope. Let's look at 2 weeks ago. I think we did. 2 weeks ago, our pivot, 63.75. Again, rounding. You had, the beginning of the week, you had 63.65 as a low, as a swing low. So $90 drawdown, $100 drawdown, not bad. Push up. This level was sticky. This level not so much at first, blew right through it. Came back down, tested this one. This is your first resistance for that week. Pivoted off of it. Let's take a look to see how much drawdown you had. If your stop got run, 64.48, 13. Nah, probably not. It's $130 a contract. And then once the sell came, right here, it did sell off of our second resistance, excuse me. Blew through the pivot. The pivot held for a minute. Pretty weak formation there on a 30-minute chart. And just rolled off. And you can see it stopped here, our support. Let's go look at the rest. I guess this was payrolls. Yeah, here's payrolls right here. And let's see what kind of range it did for the week. So 61.43 by 66.04. So it did $1.61. Expected range on that is, oh geez, these calculations are off. Excuse me. Hold on. I'm going to do that manually. 66.33 minus 61, so that's $1, or I'm sorry, $2. I'm sorry, $5.17. How did we do? So we had 517 as an expected range. 66.03, 61.40. So we had 470. So the expected range didn't meet that week. Let's go look at the following week. Pivot strong again. Run up. Pivot didn't even get touched there. Worked its way up. Sold off of R2. Back to R1. Chopping between the levels. Broke out a little bit there. And then fell off that resistance. You can see these levels are pretty clean, I guess. I mean, oil's a tricky market, in my opinion. I've never been very good at trading. It was the first futures product I traded, actually, I think. I had a couple bangers. But then most of the time I was just getting my ass kicked because it's similar to gold. It's, in an insider's market. So, you have no idea what these people's motivations are at any given moment. It's very difficult to judge your counterparty and what they're trying to accomplish in this market. It's one reason why I skipped off commodities and started trading bonds. But anyway, so this week our pivot 6282, or let's call it 6283. That's been fairly sticky. 6274 low there. Let me see. Last night the low was about 6258. So a little bit of drawdown this week off of that. If you were looking for sells, because we're in sort of, when you see this going sideways, it just keeps changing from I'm talking about this little moving average, keeps changing from blue to red, blue to red, blue to red, meaning blue being positive slope, red being negative slope, keeps flipping back and forth. This is just a range bound market. So a lot of times when you see that, you can take advantage and just play. You just don't want to get too greedy until this thing pulls one direction or the other and starts to expand or contract. The slope, I mean. So you had a pretty clean sell there off of the first resistance this morning. Decent volume on it too. And it's sort of working its way back to the pivot. So this looks like just a range trade for now. But good stuff. Anyway, guys, I just wanted to do this, and I want to be more active on this. Like I said, I just need to be a little more intentional. We've had some new subscribers, and welcome you guys. Thanks for joining on here. If you want more, we have a Discord going all the time. If you just DM me, I'll send you a link. As a reminder, this is free, will remain free. I've always had it in my mind that I want to make sure I'm providing some value before I ever turn it on to paid. There's a subscriber count that when I hit that, I will turn on to paid, but it will only be for marginal subscribers, like new subscribers. Beyond that, you guys who are here will always be free. 100% of this will always be free if I ever do go paid, just so you know. The number initially was 100. When I get to 100, I was thinking about it, but I might expand that a little bit. And it may just be a time thing. Once we hit that 100, I'll see how I feel. Like, do I have the energy to do this every day? Because if I turn it on into a paid situation, I absolutely want to be in here every day. I want it to be worth somebody, whatever it is, $8 a month, which is nothing. But I want it to be worth your while. So I want to be able to do content like this and, have the Discord be active and things like that. And again, you guys don't have to worry about this. Just spitballing where I think this is headed, or hope it's headed, eventually someday. Regardless, for now, I want to just make sure that everybody's getting what they can from me. So if you have any specific product, whether it's like an individual stock, because I'm never going to cover that on the blog, or it's a different futures contract, like commodities type situation, just send me a message. I'll run charts for you. We'll take a look at it and see how it works. So that's always open to you as well. Any market you can think of, because this is all automated, doesn't require a great deal of thought. What it does require, as we've done a little bit here, is for me to make sure it's quality, right? Let's back test, take a look, see how it's played in the past with these levels, and whether it even makes sense to use this method on whatever market you're bringing to me. But feel free to do that. I'm always out to help. All right. Hey guys, have a good one. We'll talk again soon.